All right, so what we're going to talk about today is on the screen. We're going to talk about a whole lot more than this. This is the foundation of everything that I've been doing since I was 15 and a half years old. This is one of the first things that I learned, and how thankful I am that the foundation of my trading and every indicator and every strategy that I've developed since then was rooted in something that was developed in the 1880s. Okay, now you might think, well, what does that have to do with today's trading? Gang, everything. Okay, so we're going to talk about how a 140-year-old market analysis tool or approach really was the key to successfully trading for me, any market, any asset class, any time frame. And it might sound too good to be true, but that definitely was the case for me back then, still is the case for me now. So this is a little bit about trend theory. Okay, it was in the late 1890s that a few market students led by Charles H. Dow, as in Dow Jones Dow, discovered that the stock market had a trend, that the great body of stocks moved more or less in unison, regardless of the price fluctuations in individual stocks. This trend action led to the development of a trend theory and ultimately to the Dow theory. So think about this idea of trend theory. And keep in mind that Charles Dow was probably the first financial behavioral expert out there, and that's a very big thing now. Financial behavior books are getting very popular about on that topic. In fact, I'll talk about a couple of them later on, but Charles Dow was the first. He did it first, and if you ask me, he did it the best. So let's talk about the very, very basics of the way the market moves, these trends that Charles Dow talked about. Now, when I say trends, Charles Dow used the word phases or movements or market trends. So I don't want it to get confusing. It's like three different ways the market can move, and really three different psychologies. So of course there's uptrends and downtrends. That's one phase or cycle, whatever, of Dow theory. And it's a series typically of higher highs and higher lows if it's an uptrend. Of course, if it's a downtrend, it's lower highs and lower lows. The bottom line is Dow differentiated up and down trends from the other two market phases that are on this slide. And this is probably one of the most important things that in terms of understanding market behavior, if you can wrap your mind around this one, you're going to be ahead of 99% of market participants, gang. And I'll tell you why. Most people think there are only two market trends, and it's an erroneous thought, but most people think there are only two market trends. Oh, bear with me one second here, gang. I was trying to get my drawing tools up, but I guess I won't be able to here. Okay. Oh, where did my presentation go? This is bad. Hang on one second, gang. That was really strange. There we go. All right. So no drawing tools. That's all right. So most market participants think the market either goes up or the market goes down. So they're thinking markets do this or markets do, I'm just screwing this up. Markets go the other way. So either higher highs or higher lows, and there's nothing in between. All right. Most people think uptrends and downtrends, and that is it. Distribution is a sideways wide market phase that a lot of folks still confuse with a trend. And one of the reasons this is so dangerous is because distribution market trends are not trends. Okay, they are not trends. In other words, hey gang, I just want to confirm we have sound. I've got some people saying the video's good, but there's no sound. Are we getting sound? Let me just confirm. Fantastic. Thank you very much, my friends. All right. So distribution, wide, choppy range that masquerades around like a trend, but in reality, it is an account killer. Ultimately, what you end up with in distribution is literally what the reason Charles Dow called it this is it's a redistribution, really. So folks that got into a trend early are taking profit while the next wave or next group of buyers, the late group really, are getting in. So it's almost like someone's got to hold the bag. So distribution is a very tricky part of a trend where it seems like it's still trending when in reality it's not. Accumulation, I think a lot of folks probably know. Accumulation is a narrow sideways channel. It may not last very long. It doesn't have to be of a certain length, but it does have to be a certain height, if you will. It cannot be as wide as distribution. In fact, it's usually much more organized. So we know these things from a description standpoint, right? Uptrends, downtrends. Now we know distribution is kind of the rope-a-dope, or that the end of an uptrend as the smart buyers or the early buyers are getting out and selling to the latecomers. We've seen this many, many times, typically in a topping pattern of a lot of broad equities rallies. Accumulation is that very quiet, sideways, narrow, and we'll talk more about each one of these in the following slides, but that quiet, narrow trend. So here's a trend, right? All I've got on this chart right now, by the way, are one of my Dow inspired creations called grab candles. We'll talk about them a little later, but take a look at what the trend looks like. No trend lines here, gang. You notice that? No trend lines, no indicators, just the color coded candles. The color tells me what I need to know. So if the colors are either a light green or a dark green, that tells me there's bullishness in the market. Now you'll notice there's some blue and red. We'll talk about that a little bit later. But when you have overall green candles of either shade, you have an uptrend. These candles are colored based upon their relationship to a few key moving averages. They do so automatically. But if you see mostly green on a chart, you've got bullish bias, bullish momentum, and likely also a bullish trend. So there's two examples of uptrends on this chart. Now, a few things that might help. Pay attention to this. When do the candles go, number one, green? And do you see at least 3 to 5 of them in a row? That would be a good start to the market starting to organize into an uptrend. So see where the candles first go green and see if you can't get about 3 to 5 of those candle colors, in this case green, in a row. That's going to get you well on your way to recognizing an uptrend. All right, here's the account killer. This is the one that a lot of folks misread, and it ultimately is something that they don't realize oftentimes is going to whipsaw them, meaning you're going to get long when you should get short, you're going to get short when you should get long, and that is dealing with chop. Earlier today, we were talking about chop and market frenzy, and I don't know if this is going to, there we go. You guys ever been on the teacups? Yeah, this to me is chop. I get seasick even watching this thing. That's chop. So really what we have is a market that really isn't going anywhere. It's kind of going in circles. And yet it has the appearance of still having a bullishness to it. Notice what happens in chop. It doesn't necessarily happen with a lot of blue grab candles, but you'll see the blue, that's not enough to signal chop, succumb to red and then go blue again and then go red again. Sometimes it might go blue to green again. When you look back on a group of candles and those candles are showing a rapid mix of green, red, and blue, red meaning bearish, blue meaning neutral, of course, green meaning bullish. When you see that quick mix, think the mad teacups, right? Everything's spinning around, but you're really not going anywhere. That's what's happening in that mix of candles there. And again, the colors will tell you. So that is going to be distribution or chop. And again, you want to pay attention to when the candles go blue and then go to red in an uptrend. By the way, in a downtrend, they would be consistently red, go to blue, then maybe to green. So it actually starts to reverse the candle colors. All right. So that is distribution. Next up, accumulation. Now, I will tell you, 20, 25 years ago, the market accumulated a whole lot more often. It wasn't unusual for a market to move sideways in a range for long periods of time. And I've noticed that across all markets, you see accumulation far, far less. So here's the simple trick to finding accumulation. Find as many blue grab candles in a row as possible. On top of that, you actually want to measure, and I think everyone here has different tools to measure volatility, but you want to measure that you're in a low volatility environment. But really the first cue is to find as many blue grab candles as possible and as narrow a range as possible as well. So as many blue grab candles and as narrow a range. So you can actually see the blue grab candles in here, the range is a little wider. See the blue grab candles in here? Again, the range is a little bit wider, but you're still going to be better off treating this as accumulation than a trend or distribution. It may not be a perfect example of accumulation, but again, if you see a lot of blue grab candles, think about the market squeezing into a narrow range, accumulating, right? Narrow range. Let me show you one more example because this is a really important one. Look at how many blue grab candles there are in a row. Except for that one green, you have about 6 or 7 of them in there. So it may not be long. These are daily time frames. So think of it this way. 6 to 7 sessions, we stayed in about the same range and printed blue grab candle after blue grab candle again and again and again. It didn't take long for this market to actually accumulate. We don't have the luxury of time often, but again, wait for all those candles in a row. Usually, what that is going to be preceding is a breakout, and that's exactly what we had here. In fact, we could even I can show you another example right back in here. You see these 1, 2, 3, 4. It's not a great example of a narrow sideways accumulating market, but again, this is how powerful it is. Notice how it signaled the breakout. So the market squeezes into a range, and eventually it's gonna pop out one way or the other. So blue is a neutral, more sideways psychology. All right. So the first step that I've been taking in my trading, whether that be futures, stocks, options, ETFs, Forex, the first step is always identify the current market trend. Trending, think green or red candles, green or red grab candles. Distribution, is it a mix of green, red, and blue? And is it accumulation, which is that steady blue color? Again, you might only get 4, 5, 6, 7 of them, but just in that example alone, twice you saw how it was what preceded a big move. Could be to the up or to the downside, but you want to focus on which one of the three are you dealing with at the moment. Anything less than using some sort of tool in order to understand, as Charles Dow would talk about, those basic movements and those basic phases, you're guessing at not only the strategy, gang, but you're guessing at what indicator you should use. I think a lot of folks don't think about certain indicators being associated with certain types of market trends. So if you start with the underlying market trend, you have a much higher chance of finding the right strategy and the right indicator for your trade, for your setup. All right, so let's move to the second part of this. So there are, by the way, 6 tenets of Dow. And the first tenets really are the first two I kind of combine into one, which is there's only a certain number of basic movements, which we've gone over, and the phases, accumulation, trends, and distribution. Let's talk about what Charles Dow did for us and why the next um, Dow Theory tenet is a pretty big one for those of you that watch the equities markets and trade equity futures. The stock market as a whole had an underlying trend, right? This is something that Dow and his students talked about early on, that the stock market as a whole had an underlying trend, distinct from daily fluctuations of individual stocks. So he noticed that what? Certain stocks moved together. And then what happened? It led to the use, really the creation of the Dow Jones averages. So again, he noticed that certain stocks moved together in these trends that we talked about, and then he created these averages. Remember, before this, there weren't averages. We take a lot of these things for granted, right? So trending markets are really the basis, I think, of success for every trader and investor. Trends are what we're all waiting for. Trends are what we try to trade. Yes, chop and accumulation have strategies that we can use, but we all know what happens when the market is trending. The margin for error for entry, the follow through, everything is better. I mean, we're always looking for trends in a market. Focusing on a group of stocks that move together or affect one another was the early foundation of Dow Theory. By the way, Dow Theory was never organized by Charles Dow. That was all posthumous. So we've had to speculate as traders over the last 140 years about what he really meant. He had all his writings and so forth, but Dow Theory was all posthumous. He didn't put these tenets specifically together. So we use Dow Theory even today. And one of the things that I think a lot of folks may have heard about, and if you haven't, this is a big one, that the Dow Transportation Average and the Dow Industrial Average are something that we all as traders should be keeping an eye on. The old saying goes, keep an eye on the transports. Charles Dow believed that railroads, trucking, airlines, those were those predictive or forward looking indicators of an economy. And I think it still holds true today. So, what we want to do is take a look at, well, here's a perfect example of, and we'll go back to that last slide in a moment. Volume confirms price and trend, but we're going to lay the Dow Jones Transportation Average there on the left and the INDU, the industrial average, on the right. Now, these are monthly charts. Everything I'm sharing with you, gang, can be true in a 1 minute chart, can be true in a weekly. So don't feel like you're going to be pigeonholed into longer term monthly or daily trading. I use these same tenants when I'm day trading 1 minute charts or intraday trading a 5 or 30 minute time frame. Okay. And these grab candles will work on any time frame. So I can break down the underlying market trend regardless of whether I'm looking at the euro, crude oil, or Pepsi. Doesn't matter. So the Dow Jones Transportation Average is on the left. Okay, again, think about railroads and trucking and airlines, etc. The Dow Industrial 30 is on the right. So not only do you want the transportation and the industrial average to confirm one another, and we can do that with grab candles. If the transportation average starts to get a little wobbly, it goes from green to blue to red, say like we saw here at the end of 2015 going into 2016. Notice how the INDU, it did get a little wobbly as well, but it did not confirm with a red grab candle. A lot of folks talk about confirming these two, yet I'm not sure how they would do it without a breakdown of Dow analysis via a tool like the grab candles. So since I did not see the same kind of price action and that red grab candle appear on the chart on the right, the Dow 30, I realized that they're not confirming one another, and I'm not going to get tricked, fooled into shorting something that still probably has a lot of bullish momentum behind it. Okay. Another thing that Dow talked about, and let me see if I can go back. No, let's see. There we go. Is that not only should the transportation and the industrial average confirm one another, volume should also confirm the movement. Volume should increase in the direction of the trend. Trends are confirmed by volume. Broader equity market trends should be confirmed by the transportation average and the industrial average confirming each other. So a lot of confirmation here, right? Volume is just another way of saying opinion and participation, right? We can have prices reach a certain price level, but there could be very little participation there. If there's more people involved at a certain price, there's a broader opinion of its importance, and therefore it's simply going to be a more important price level. Even though many price levels could be traded on any given day, any given hour, the one that has more volume, the specific price that has more volume, is going to be more important. Here's what's really interesting. Back in the 1880s, Charles Dow didn't have the tools that we have now. We have an edge even on Dow because the transparency of the market is so much different. Volume can be insanely tricky. I'm sure a lot of folks have read volume should confirm the trend, and then you see, oh my gosh, the market reversed right after that. Because volume in the traditional sense, like we have down in here, while valuable, is not necessarily as accurate as we All right, gang. Let me get the presentation back up, but let's get a quick audio check. All right. Okay. Thank you for the patience, gang. Awesome. Awesome. All right, we're back. So let me give everyone just a minute to get back. I don't think anyone left. All right, good, good, good. So I mentioned that volume is tricky. It's a little antiquated in the way that we've done it. There's a better way to do it. And basically, when we talk about Dow and volume, there's a better way to do it. Okay, but we'll get to that in just a moment. All right. So we talked about the Dow Industrial and the transportations must confirm each other, and volume must confirm trend. Yes? Everyone doing all right so far? And the sound should be back. All right. Good sound, good audio. Wunderbar. All right. Dow theory does not ignore news, gang. And this is something that I think a lot of technicians would really, it would serve them to think about this for a moment, because a lot of traders tell me, well, Raghee, I'm a technician. I have my indicators and I don't follow the news. Dow talked about the news long before we had cable and internet, and even, of course, there was no internet. Dow theory does not ignore news. Charles Dow, even though in many ways he's one of the early practitioners of technical analysis, said that we must understand news's impact on price action. He believed that the market participants discount all news. That means that price is already reflecting what we as a group of market participants think we know or are expecting, right? So if there are earnings in a stock, we know that, we're expecting that, and we're going to make an educated guess about whether we think those earnings are good or bad. OPEC, we had OPEC meetings this week. Anytime we have these OPEC meetings, when the oil cartel meets in Vienna and they're making a decision about oil, the market also is going to make guesses about whether or not they're going to increase production, decrease production, etc. So the market makes an educated guess about what's going to transpire during that meeting and what ultimately the impact will be on the underlying asset, in this case, oil, and also gas, and also heating oil, etc. So because the market's always a forward-looking mechanism, it's always discounting, it's always making an educated guess based on what it knows now. If there's a surprise, data misses expectations, earnings don't meet consensus, geopolitical issues, we have a dramatic rediscounting, a dramatic adjustment to what we thought we knew to what we now know. So the market's always paying attention to news, and Dow talked about that literally 140 years ago, that the market discounts all news, which means we need to know what the market is thinking about. We need to know what and how the market is going to respond to, again, OPEC, FOMC, non-farm payroll, earnings, etc. All right. So that was a major tenet that I think a lot of folks tend to overlook, that Dow did respect the news, or at least respected its impact on price action. All right, another tenet, and I love this one, and this is really how it was explained. Okay. The trend will continue until it doesn't. A lot of help there, Charlie. The trend will continue till it doesn't, so says Charles Dow. So in this particular example, the question mark I have here, and this has been a trend that we've been long in the futures room for some time. This is the 30-year bond, also known as the long bond. Would I jump off this trend? No way. Although I'll tell you, because I started to hear this, the chatter out there in market land. A lot of folks started to bail here. What do we know now when you think about the trend and the directional bias and basically the behavior of the market? This was an uptrend that turned into what? Distribution. Blue, green, a little bit of red. Not a really dramatic example of distribution, but it was not as high quality trend. But what do we know? A trend will continue until it doesn't. And if we transition from a trend into chop, this is a big one, gang. If you can, write this one down. I hope you guys are taking notes, but definitely write this one down. Respect the trend that was. Respect the trend that was. And what I mean by that, I'm going to write it down here and put it on the screen. Respect the trend that was. What does that mean? Respect the trend that was means that whatever the preceding trend of the market, in this case, all the green grab candles through here, before we got the blue and the red, rather than assume a reversal, we expect the market is going to continue. Okay, so the first knee-jerk reaction when people see a pullback or a retracement, or in this case, maybe a blue or red grab candle is, oh my gosh, a trend is done and now I've got to go the opposite way. That is for people out there who don't know what you know now, that the trends move upward, downward, in a sideways wide range and in a sideways narrow range. And trends will continue until they don't. Gang, V tops and V bottoms are rare in a market. Very rare. Typically a market on a daily time frame, even short term, reversals, sharp reversals are not common. We're playing probabilities, aren't we? The probability is that the uptrend is going to transition to chop, and that if you can identify oversold support, like you can assume this may be, you want to stick with the buy. Now, when you really get good at this, you're going to find that there's a whole other set of buys in this zone. But in the beginning, realize that this is noise within the trend. How do you identify noise? Look at the trend, respect the trend that was, and then realize that 1 or 2 or 3 or even 4 red grab candles are not going to undo, say, 40 green ones that came before it. And certainly blue neutral candles are just that. Think about being in a car flying down the highway. You got your foot on the gas pedal, you take your foot off the gas pedal, unless you're driving a Tesla, which is a really weird experience, you're going to keep coasting in that direction. Just because you took your foot off the gas pedal doesn't mean the car stopped and went the other way, yet that's what people think the market does, right? Doesn't make any sense. And even if I tapped on the brakes a little bit, like the red grab candles here might be saying I am, does it stop the car? And am I suddenly going south on the highway when I was heading north? Of course not. The market works the same way. So make sure you differentiate between the noise within the trend and expect that the trend will continue. Respect the trend that was. Okay. All right. So far we've covered, I know it went pretty quick. So far we're about halfway through. We discussed these particular tenets of Dow theory. Now, I will tell you that I tend to combine 1 and 2. Those really aren't two different tenets to me at all. That the markets have basic movements and that there's accumulation, trend, and distribution. Those aren't really different to me. So we talked about how the grab candles and in their colors can show you if the market's in a trend, if it's in chop, or if it's in a narrow sideways range, right? The markets discount all news. I'll show you what news source I use. In fact, I'll show you 2. They're both free. We use them in this Simpler Futures chat room all the time, okay? But the markets discount all news. The worst habit I see technicians or people who rely on charts do is they feel like, well, news doesn't matter to me. Really? Because this Friday or any first Friday of the month at 8:30 in the morning Eastern, try that. When non-farm payroll runs over a trade that you might have on or increases the volatility of the trade, you go, well, I'm a chartist. I don't look at news. Doesn't matter. You got to understand, at least in a scheduled way. I mean, it's out there for free. At least have it on your calendar, okay? The Dow Jones Industrial Average and the Dow Jones Transportation Average must confirm one another. Again, put both these charts up, put the grab candles on them, and make sure if you're getting the same kind of color, say a red like we had on the transportations, make sure the industrials are confirming, and vice versa. Right? Grab candles and these 2 charts on the same time frame side by side accomplish this particular Dow tenet very easily. Volume confirms price and trend. This is where I said, look, Dow had end of day volume, and that's okay. We have something better, But again, you want to confirm that certain price levels have participation. The next time someone talks about volume, think, okay, that means opinion and participation. Did the price level that I want to get in or get out at, does that have participation and volume associated with it? There are ways to decode that. Okay, there are ways, it's called volume profile, by the way. There are ways to decode that. And finally, trends tend to continue. If you're flying down the highway, you take your foot off the gas, you're still heading down the highway, right? Even if you tap the brakes, you're still heading in that direction. Keep that in mind. Respect the trend that was, okay? All right, so let's get to kind of the nitty gritty and talk about how you can do this with the tools that I'm going to share with you here. Use the grab candles to decode the market movement in phases. Again, if there's mostly green grab candles, that means the bias is up, and what precedes a trend? Bias. So you want to see those continuation of green grab candles, and even if there's a little bit of noise, you know what to do now. Respect the trend that was. So here's a trend. By the way, these red candles, that's a trend for sure. Look at how it transitioned, by the way. You know, so even the transitions, you'll be able to see a little bit of the market changing its mind. It's usually pretty subtle until you understand what the grab candles are telling you. The grab candles make it really color coded easy. So there's a noise within the trend. There's a resumption of the trend. I talked about the calendar. So if you write this down, the logo is in the upper left-hand corner here. Even if you are a stock trader, I'll give you three calendars here tonight to use. These are the three calendars that we use in the futures room. So you know what? I'll just put them here right on the screen. So what we look at every day is a site called Forex Factory. Don't let the word Forex throw you. It's just a great international calendar. We don't live in a world where Chinese data doesn't affect the stock market. Of course it does, right? So you don't want to look at a calendar that's just looking at US market events. We want something looking globally at the different events that are happening, right? If there's a bank holiday, central bank activity, Forex Factory is a great way to look at the entire market. Another one that I would recommend for earnings season, I use this one a lot. It's called Estimize. Again, another calendar. And what the calendar on Estimize is going to show you, once you put in the stocks that you're watching, which ideally are stocks that are heavily weighted within the broader averages and the sectors, gang. That's what we do in the futures room every day. I'll show you a couple examples of some of the positions. Estimize.com is going to let you hone in on my preferred 4 weeks out before earnings. I'm actually starting to play around with 4 to 6 weeks out before earnings. 4 weeks out, even 4 to 6 weeks out. But Estimize will tell you, okay, this earnings coming up on this day, go back 4 weeks to 6 weeks. That's going to be your opportunity window. And I will also recommend the calendar over at Econoday. I don't know what the link is on that one. And the only reason I recommend the Econoday as a backup to Forex Factory is sometimes we'll end up with more minor FOMC chatter. And Econoday does a really good job of making sure that if there's any Fed Reserve Board member speaking, they do a really good job of making sure that they list the time, because we know that that is going to affect volatility in the markets. Okay, so Forex Factory, Estimize, and the calendar at Econoday specifically for those Fed events. All right, we talked about this one already. Use the grab candles to compare the Dow Jones Transportations and the Dow Jones Industrial Average. If one plots a red and the other doesn't, don't worry about it. If one plots a blue and the other doesn't, again, they have to confirm. Let the grab candles be the confirmation tool. Really simple. And did I mention, by the way, gang, before I get too ahead of myself, did I mention the grab candles are free? These are free. What I'm sharing with you right now is a free tool. It's free on TradeStation, TradingView, Thinkorswim, and the Sierra platform through Infinity. So I've made this tool that I developed literally 3 decades ago available across multiple platforms. And I know there's others that have it, but those are 4 platforms that I use pretty often. Okay, so this is a free tool, by the way, the grab candles. All right, so let's get to volume because again, talking about the tenants here. Let's bring this back here for a moment. Talking about the tenants, um, volume confirms price and trend. We talk about trends tend to continue. Think about the highway. This one's a big one, number 5. And it doesn't get as much discussion as I think it should. In fact, the really important ones to me, gang, that I think are overlooked by market participants so very much are number 1 and 2, start with the market trend. And number 5, that volume confirms price and trend. And most folks are still doing it sort of the old fashioned way, which is with end of day volume bars, which gives you no insight. I think it's a problem that a lot of folks don't realize is a problem until they see something better. Volume spikes are interesting, but I found the probability of them being continuation spikes versus exhaustion spikes is almost 50-50. The probability is very low with end of day volume. But again, remember, that's all Charles Dow would have had, right? So what we have now is something called volume weighted average price. We're taking the same tenet from Charles Dow and saying, look, we've got a better way now. So how do we see volume at specific price levels versus over a period of time? And that is what VWAP. Now it's like if you had an iPhone app, it's VWAP. Okay, volume weighted average price. This is actually an example of the VWAP anchored on the 30-year bond, which was one of the VWAPs that I had dropped in order to get long the bond market because I wanted to find out which price levels were better support. Again, support being confirmed by what? Volume, right? So this is like a volume moving average rather than a price moving average, which would have been something Charles Dow could have done manually. Now we're putting volume into it so we know exactly what type of impact a specific price level was affected by using volume. All right. The VWAP is used to confirm price and trend, not just volume bars anymore, gang. So that cyan line, by the way, the thicker cyan line, that's your VWAP. Notice that the VWAP kicked in, showing support. It's an anchored VWAP, by the way. Support before the volume spike. Now, the volume spike would have got folks' attention, and in a Charles Dow universe, that was great. That was great. But we have more transparency now in the market. And what we're able to do is anchor these volume weighted average price tools to get a heads up on which price levels have that importance of volume. Does that make sense, gang? Any questions on that? And I tell you what, if Dow had VWAP, he would have loved it. He would have absolutely loved it. All right, so I'm still getting some feedback, gang, that we don't have. Okay, the sound is working. All right. What do I mean by anchored? Bill, great question. And how do you get the VWAP? Thank you, Fiona. We'll get to that in just a moment. So I want to make sure that you guys understand the concept for sure. So an anchored VWAP is basically looking at a particular candle. It's actually a simple little pattern and putting the volume weighted average price tool on that date. Not, let's say, for example, earnings. We get a massive earnings volatility move. You could anchor the VWAP to certain earnings to see what the volume weighted average price reading has been since a massive event like an earnings report, or non-farm payroll if you're trading the broader equities or a currency. By the way, this isn't just for end of day trading. Remember, Charles Dow had end of day trading. We have intraday. So you can anchor a VWAP to time as well. So when you say anchored, what it means is we're either taking a time anchor or a date anchor. Okay. And then in that way, from that particular anchor, time or date forward, we're measuring which price level had that volume participation, that opinion, right? Make sense? All right. Let's put a few of these tools here together. Hang on. Let's put a few of these tools here together. And I love this example because this is one I did just today. This was a trade we did in the room, and this was in Pepsi. Now, Pepsi always cracks me up because a lot of folks either don't realize or don't know that Pepsi is actually more heavily weighted within the NASDAQ than Adobe, PayPal, Netflix. It's a major weighted name in the NASDAQ. So we were looking at Pepsi. We're just 7 days from earnings. How many of you are looking at Pepsi right now with that run into earnings? Okay, so I'm showing you actually here another way. So we have 3 ways to break down Charles Dow's love of volume. We have 3 ways to do it. One is with the volume weighted average price. 2 is with something we call V profile, which actually looks back again on a specific amount of time. That's what's running right here. Do you see these automated trend lines that are running, or horizontal lines that are running here? Okay. Um, this is a series of support and resistance levels that are derived using price and volume, not connecting the dots, not finding wick highs and lows, but actually using Charles Dow's tenant. Let me grab that link there again, or of having volume confirmed price. These are volume confirmed price support and resistance levels. So one, we're trading right at it. You see that right there? That's what's known as the value area low. So we're trading at one of these automated support and resistance levels. They're automated because I'm not drawing any of these lines. It looks back on a certain set of time and then says, okay, Rog, these are the support and resistance levels you need to watch because these are the volume confirmed price levels that are important. And then down here, we have what's known as the V-score. This is another Dow inspired tool in many ways. And what it does is it looks at volume weighted average price and how many standard deviations away price action is from it. So if you like standard deviations, has the market kind of wandered away too far? Or is it right near sort of that volume thick layer or not? This is what this is going to determine for you. So sort of the punchline is this. My V-score is bouncing off levels that it's bounced off before, 1, 2, 3, 4, almost 6 or 7 times. And I'm sitting at that automated support level, all using volume as a priority and then price. Okay. So that's the pullback in Pepsi 7 days before earnings that we were looking at. And some of the traders got in this at, gosh, what was the price? 380? I'm trying to remember what we were trading at in Pepsi. I should, but yeah, they jumped in on this at, or was it? I can't remember what the price was now. 380. I think it was 380. I think the last time I looked at this, I'll have to double check. It was up like 50 cents from that entry, and that's the power of using price and volume. Gang, you find these levels that have the price and participation, that emphasis, gang, on participation. That's what Charles Dow told us 140 years ago. All right, so again, this is a continuation play in Pepsi from today using these Dow influence tools. All right, so let me give you guys the links for these tools. So as I mentioned, the grab candles are free. All right, you can, so let me tell you where you can get them. If you're a TradeStation user, how many of you are on TradeStation here in the room? I imagine most of you are on Thinkorswim. If you're using TradeStation, this is super simple. Go to the TradeStation trading app store and search simpler trading. In fact, I'm pretty sure this is still one of the top rank free indicators. So you should be able to find it right on the homepage of the TradeStation trading app store. And you can download it right from there. All right. Thinkorswim, a little trickier. Toss needs to put grab candles on their platform. We need to like barrage them with emails and tell them you need the grab candles on Toss. For right now, you guys need to go over to Raghee.io, Raghee.io, which is a link. Like instead of .com, you do .io, and there's a whole bunch of folders in that Raghee.io folder. It's a box.com folder, and you're going to see a subfolder for Thinkorswim, and in that subfolder you'll see the think script for the grab candle. So you guys have to import them and add them, but it's super easy. The think script is there. If you're having any issues, we have the support back at Simpler HQ. The folks can help walk you through, but it's super easy. Just download it from the folder and import it into your Thinkorswim. And again, a lot of the members at Simpler Futures are using these, or they're, if you need any help with these, certainly ask me in the room, ask me in the Simpler Futures room, or you can contact support at Simpler HQ, and they'll walk you through it. All right, if you're using Sierra and Infinity, most of you then know Patrick, Mr. Patrick Zilbauer, pz@infinityfutures.com. Let him know that you want the grab candle layout, and he will push the chart book out to you. Super easy. He will push that specific chart book out to you with my tools on it, ready to go. All right. And then finally, for TradingView, for the handful of you that might be with TradingView, you can search Simpler and activate the 34 EMA grab indicator right inside of TradingView. If you're trading things like cryptos and maybe Forex, some of you might be using TradingView for that. And so you've got that indicator free on that platform. All right, the VWAP tools. So I know this is a crazy link, and let me actually cut and paste this one to you guys. All right, this one's a link that for the VWAP. So it's the VWAP tools that I was just showing you there. And you can get that right from the store. Some of you might have already attended the Sonar class. How many of you attended the Sonar class here in the room that I just did, the submarket trends class? Oh, wow. David. Oh, gosh. Okay. That's a lot of me. Oh, fantastic. So you guys have this. And if you don't have this, head on over to that link that I just shared. Oh, that's awesome. Fantastic. All right. Excellent. So you guys have this. So hopefully this was a little bit more insight into how to get the most from it, right? If you're using that tool right now, HockeyNet says you are popular. Not since high school, HockeyNet. All right. So excellent. All right. So yeah, all you need to do is head on over to that link. And you can, and if you didn't take the class, no worries. The indicators are available. And if you review this walkthrough, or when you join me in the Simpler Futures room, how many of you are in the Simpler Futures room, by the way? Okay, excellent. All right. Well, if you're not in the room, again, you can head on over to that link, and you can pick up the class as well. We use the tools in the room very often, every day, right? Is there somewhere that we can find? Well, so that's a great question, Jay. That's a great question. The difference between a standard or rolling volume weighted average price, rolling VWAP, what's built into a handful of platforms. VWAP, by the way, gang, is still kind of new. It really hasn't enjoyed widespread popularity, and I don't know why, but hey, their loss is our gain. We know how to decode this stuff now. And so the problem with the rolling one is that you cannot anchor it. You can't anchor it to a time or a price, and therefore it's going to be a little less accurate. But if that's all you've got, JD, I mean, it's better than nothing. It is better than nothing. Having the anchor as a degree of accuracy that is far superior to a rolling, but again, it's better than nothing, because at least you'll still be looking at price and the volume participation added. So for those of you that have that, I would recommend just checking out then the Sonar class, because what it'll do is show you how I use the VWAP. Because I think a lot of folks think that if you just lay the VWAP on that level, VWAP on your chart, that you just buy the level that it comes back to. But remember, you need to go back to the underlying market trends. So think about VWAP plus the grab. Let me show you what so here, think about VWAP plus grab, or the V score plus the grab. I mean, why am I looking for a buy here? Why is the buy the direction I'm looking for? Well, yes, we are above the volume weighted average price that's anchored, but we're at the value area low, the last month, the price level, the low that had the most volume at it. It's the best kind of support I could hope for. Then I'm getting the V score telling me, yeah, we've bounced off a +2 standard deviation. However many times? Almost a half dozen times over that. So that's what I mean about, you still want to use the grab candles, and then a couple of the other tools will layer on there. So the VWAP will give you some support and resistance, but the grab candles are going to give you that direction. All right, so a couple other tools are the VWAP tools. So David L, I don't have, we call them the sonar tools, submarket trends, right? We don't have them available for TradingView yet, but the grab candles are, and certainly that'll get you in the right direction. So typically we stick with the platforms that are super popular amongst the members, and I like TradingView a lot, my friend. It's one of my favorites because I can put it on my phone and look at any market with the tools, but we don't have it for that yet. So Thinkorswim, TradeStation, Sierra. Um, I only trade options. Do I trade options in the room? Fiona, you know what's interesting about the options is Pepsi. Well, there's no futures contract on Pepsi. So you might say, well, what does Pepsi have to do with a futures trading room? You know what? Let's go to the live charts here for a minute. What does Pepsi have to do with a futures trading room? So let me go to, there we go. All right. So here's Pepsi with the same tools that are running on that slide that I just showed you. So this is the chart that I pulled it off of. As I mentioned before, Pepsi's a heavily weighted name within the NASDAQ. So immediately it's on the radar of a futures trader. You know, as would Microsoft, as would Apple, Amazon, Facebook, right? Every broader average, an ETF, by the way, has a weighting of stocks. So when you're trading futures, you're trading sectors and then you're trading heavily weighted stocks. So to me, Fiona, it really feeds it. Does that make sense? Now, if you're only trading options with Pepsi, with the Pepsi setup, what we did with Pepsi, I'm trying to remember, we went with the August 16s and we went with the 130. I believe it's the 130s. I'll have to double check. I sent it out as a in-room alert. So do we trade options? Yeah, absolutely. Absolutely. We actually trade options in a number of markets, whether that be crude, whether that, I mean, right now I'm looking at what I'm in right now, options on Euro, construction, Microsoft, the NASDAQ. We had calls in the NAS gang going into the weekend. So that was a pretty darn good day for us. So we've been playing options on the futures and on the underlying ETFs in this environment because A, it's summer, and B, we're dealing with really crazy high volatility. And the market, kind of going back to Charles Dow, is having to discount so much. Like some of you mentioned tweets. You know, the president has a good meeting with the president of China. President Trump meets with President Xi. Things go well. There's a tweet. It doesn't matter what is necessarily driving the market. It matters whether or not we knew it was coming. Was it scheduled or not? Right? And when we have a lot of unscheduled events, at that point we have to adapt by way of being able to manage the volatility, and options are a great way to do it. So absolutely, Fiona, sure. As long as they're related back to the futures markets, I'm all over them. Do I not use the wave? Hockey nut, I do, but and it's a little bit of a redundancy to the grab. I thought for the sort of getting started on the Dow discussion, we would keep the charts kind of basic. But absolutely, I love the wave. And for those of you that are wondering what Hockey Nut is asking about, let's see, do I have the wave? Yeah, here's an example of a little bit more glammed out version, and those lines are the wave. Yeah, I don't want to like throw anybody off and freak anybody out, but yeah, you can keep adding layers of tools, most of which that are running on that chart are free. Yeah, we make them available free to members. So I do love the wave, absolutely. But the wave is what dictates the color of the candles, right? So I feel like we've got that covered. All right, is the V profile, which shows the point of control, supposed to show up when you load the intraday PM settings? Jimmy, so if you're using V profile, which by the way, for those of you that are curious, it's the automatic support and resistance lines that pop up here that are drawn based upon prioritizing volume. So yeah, I do want the V profile, Jimmy, to show up. I do, my friend, and I want it anchored to the open. So have it anchored to either 9:30 or 2 a.m. I like it to anchor to the European Open, but you can anchor it to the US Open. But try anchoring it to, actually the V profile, no, the V profile is 9:30. So use the V profile at 9:30 and the V score at 2 a.m. Eastern. And if you're in, Jimmy MC, are you in the room? Are you in the futures room? Because I can walk you through that. That's not a problem. We're just about out of time here, gang. Are these available on Ninja? Bradley, no. No, they're not. Again, Thinkorswim, Sierra, TradeStation for now. But as the requests come in for folks wanting other platforms, I'll sit down with Eric at some point. But for now, those are the platforms that we have it on. All right. Let's see. So is this indicator, Sue? No, that's a rolling. That's a rolling one. Again, if you have a rolling or moving VWAP, again, it's better than nothing, but it's not going to give you the high level of accuracy like what I showed you here on. Actually, take a look at this chart on Pepsi. The anchored VWAP, look where it landed. So that anchored VWAP is just going to be more accurate than the rolling VWAP. Again, the rolling is better than nothing, but you really want to use the anchored when at all possible. All right, and that's that link that I pushed through here, which I'll be happy to push through again. All right. And if you guys have any questions, feel free to call customer support tomorrow, and they'll hook you up with whatever it is you're looking for, whether that's a trial to the room or the indicators, for sure. Okay. I'm bullish Pepsi. Yes. Yes. We bought on a pullback. Yeah, you bet. By the way, we did the same thing in a number of markets, whether that be the NASDAQ, whether that be Microsoft, same process. Mark, can the grab candles be used with the Squeeze Pro? Mark, it depends if you're used. So just the Squeeze Pro, yes. In fact, well, here, let me show you what I would recommend if you're a fan of the Squeeze. I would absolutely recommend that you focus on when you see those blue grab candles. Now, if you're using the early in and out, I would just tell you to use a separate chart. So if you're using early in and out, it's that color codes the candles. But if you're not using early in and out, my favorite combo with the Squeeze Pro, or the Squeeze, if you guys have the original one, is blue grab candles with a Squeeze getting ready to fire, because what that tells me is literally price action is squeezed a la blue grab candles, and now we've got the heads up from the Squeeze indicator that we're going to see momentum. Okay. AK, reach out to customer service. I'm not the decider of such things, but I'm sure they'll be able to give you a trial or whatever. AK, just reach out to customer service at the office. Just give them a call. Yeah. Was Pepsi anchored at the earnings? Pepsi was anchored at a pattern that we call a minor low max. A minor low max. The cool thing about volume weighted average price as compared to, say, trend lines and things like that is you can kind of project a trend line and kind of have a guess at where it's going to end up. Volume weighted average price, you don't. You cannot curve. It's almost impossible to visually curve fit the VWAP, which is why it keeps you honest. Yeah, Hockey Nut, to your point. Like if I was going to draw a trend line here, I could pretty much imagine where it would go, and I could almost curve fit it to land there. The human brain can do that. It can see the pattern and make it happen and confirm what it is we want. VWAP doesn't care what we want. VWAP only cares where the volume and price came together. So you can't really curve fit it. Does that make sense? I don't draw trend lines. In fact, I don't draw anything manually on my charts anymore because all my tools do it for me. And it takes that element of curve fitting. It takes that element of subjectivity right out of my charts. All right, let me take a couple more questions here, gang. We're going to call it a day. And for those of you that are in the Simpler Futures room, feel free to ask me whatever questions you want about the Dow and the presentation. For those of you that want to kick the tires, like I said, we have a trial and you can call customer service. They can hook you up. And then if you want to use the tools that I've shared with you all, specifically the VWAP, those are one of the rare instances that I have a premium or paid for tool. But the rest of the tools that I'm sharing with you all, they're available free in that Raghee.io folder. I have a lot of goodies in that Raghee.io folder for members. I share that only with members. I'm sharing that with you guys, regardless of what room you're in right now. There's a lot of goodies in there, and those are the things that we use in the futures room day in and day out. Okay, and that link is the Raghee.io. Okay, so you guys have the link for the VWAP tools and for the grab candles. Excellent. Okay. Al, we sent it out as a room alert because ideally I like to have more than a week before earnings, but that is something that a lot of traders in the room did jump on. And if it trades down back into the range, I might send that out as an alert. I haven't ruled that out. Corn was another one that did something similar. Corn, beans. There's some interesting pullbacks. Gold was another really interesting pullback, and so forth. Do the indicators come with the sonar class? Yes, gang. If you just want the sonar class, absolutely. The indicators are what I shared with you all, which is the VWAP Max tool. But if you want to dive into the sonar class, which includes the indicators, I believe the sonar class is listed in the courses. And again, you can call customer support. There it is, submarket sonar, right there. So we did include the indicators, the VWAP Max indicator. So that is included in the sonar. Sure is, yes. So if you just want to dive into the class, that's the best way to do it. But I know a lot of folks like to play around with the indicators before they go the class route. So I shared with you all the indicator link. All right. Did we say we can find the grab candle indicator for TOS? Raghee.io, JD. That link that I sent through before. Raghee.io. All right, gang. Well, thank you so much for your interest in learning about Charles Dow and how it really is the core, the foundation of everything that I've done throughout my career, gang. I'm talking 30 years and every market, including crypto. All right. It doesn't matter because remember, Charles Dow is measuring human behavior. That's really what his message was. So if you can master what I've shared with you here, and it's easier to master because I've given you the tools to do it. Grab candles, the VWAP, the V score. So we can now take what was just sort of theory and make it practical and applicable, right? That's the whole point. Indicators should take a theory and make it practical. So now you understand what drives them. Thank you so much for your time and questions. I appreciate that, Dan. I can never listen to you and learn from you enough. Well, I appreciate that. Thank you very much. I appreciate that, Dan. All right, gang. Thanks again for your time. And yeah, I think this is recorded. I know a lot of you asked if it's being recorded. So it is, and we usually send a recording out really, really soon. All right. Thank you, gang. Have a great one. Be good to each other.